All right, today is Monday, May 2nd, 2022, and this is a monthly review for the past month for my portfolio. So I try to do these reviews once a month just to talk about what has happened in the portfolio and to give you some of my thoughts on what's going on in the market. May not mean a whole lot, but some people are finding value in it, so I'm just going to keep doing it. Hopefully, my nieces and nephews who are watching can learn a thing or two. So this review, even though it's on the 2nd, it's for April. And at the end of the last video for March, I had said that the market was going up crazy the last week of March. And I didn't quite understand why it was going up. And that comment was pretty prescient because the whole month of April was a huge correction. So at the end of the last month's video, I basically said that there were rumors that the Fed was going to raise rates even much faster than anticipated just to combat inflation. And that there were rumors of rate hikes of 50 basis points, in the next couple of Fed meetings. And at the time, it was just rumors. And the market was, just reacting to what the Fed had done with the first hike. It came in at 25 basis point. Everybody seemed happy, and then the shit hits the fan, right? Inflation is still super high, and even the most dovish Fed governor has come out and basically said they need to raise rates a lot faster and get rid of their balance sheet faster than anyone has expected. And basically, once they said that, the market went crazy on the downside. And we are where we are. It's probably the worst month for my portfolio in a long time, except for during the pandemic. But it was pretty bad. So how do we do year to date? Well, as of April 30th, the portfolio was down 7.4% for the year. That's compared to the S&P 500, which is down 13.9%. So still doing better comparatively speaking. Most of that is really due to the cash position because my risk parity inspired allocation is treading water. It's doing slightly better than S&P 500, but it's not doing as well as I hope only because long-term bonds are just taking a beating. It doesn't mean that you should stop buying long-term bonds, but a lot of these things are happening in the short term, right? We're doing this on a monthly basis, and that's what happens. So in terms of just a 1 month decline, my portfolio saw a 5.6% decline from end of March to end of April. By comparison, I think the S&P 500 was down like 9.5% for the same time period. So it was a pretty brutal month in the market overall. And I made a prediction in the last video that I was expecting to see a lot of turmoil by September of this year, and we're only into the beginning of May. So all of this may be happening a lot faster than I expected. But April was a brutal month. So within a 30-day time frame, my portfolio hit an all-time high. That was on March 29th. And then it hit an all-time low exactly 1 month later on April 29th. So there you go. That's the market for you. But overall, I think that I'm still, doing fairly well, and I'll just keep sticking to the plan. There's a saying from Jack Bogle, who was the founder of Vanguard, that it's better to have a suboptimal plan and to actually follow and carry it through than to try to have the best plan you can but not have the discipline to stick with it and trying to jump in and out of the market, time it, and all of that. And that's what I'm going to do. So I think that this is actually a great buying opportunity for people who are accumulating. If you are retired or close to retirement, you may be very nervous watching what's going on in the market and wondering how it's going to affect you. I totally get that. But I think that if you are accumulating assets, this is the best time to do it. You want to accumulate asset in a falling market environment. And, my personal story is that I started working full-time pretty much at the end of 1999, starting into the 2000, where we had the tech bubble collapse, right? And through all that decade, while the NASDAQ was pretty much flat from 2000 to 2010, I was accumulating. I didn't know that this was the fact, but this is what I was doing. I was just buying on a regular monthly basis, contributing to my 401k. And the decade after that really paid off. So if you're saving and accumulating for your future, this is the exact environment that you want to be in. Seems scary, but you shouldn't be scared. You should just have a plan, stick with it, and do your dollar cost averaging, and you'll be fine. In terms of the sector portfolio allocation, it's still the same as last year. Still have a big cash position just sitting there. I'm only moving, a small percentage every month into this newer allocation. So overall, not a whole lot has changed. But if there's anything you can take away from, my videos, not just this one, but all of my videos, is that have a plan, stick with it, consistently save, and stay fully invested no matter what's happening. When other people are panicking, you do better to just stay calm. The other side of the investing in a down market environment is that while things are going down now, it portends that in future years, we're going to have better performance, right? Not next year, not in the next 5 years, but if you're looking at it decade over decade, when you have a period of down performance in the market, the next period will have an above average performance. That tends to be the pattern. And over time, the market rises, right? So if you're accumulating assets and savings, this is the great time to do it. Just keep on investing and you'll be fine. Thanks for watching, and I'll see you on next month's update. Later.